All right, let's talk about year-end payroll. Just saying those words can make a lot of people break out in a cold sweat. It feels like this huge, complicated chore, right? Well, it really doesn't have to be. Today, we're going to take that whole overwhelming process and turn it into a simple, actionable playbook.
Okay, so right off the bat, let's get one thing straight. This isn't just some routine task you check off a list at the end of the year. Closing payroll is, and I mean this, a critical control exercise. It's basically the moment of truth for the entire company's financial health.
But you might be wondering, okay, but what's the big deal? We do payroll every month. So what makes this final one so much more important than the other 11? Well, let's dive into exactly what's on the line here.
Because here's the thing. Getting this right, or yikes, getting it wrong, affects so much more than just a person's paycheck. The impact spreads across the entire company. It's a huge deal for a lot of different people. Honestly, the best way to look at it is like this. It's a full-on financial health checkup for the whole organization. This is the one time all year where every single salary, every bonus, every deduction gets put under the microscope and validated. There's absolutely no room for error.
And look, this table really breaks down why it matters to literally everyone. For your CFO, it's all about the integrity of the company's financial statements. That's their neck on the line. For the HR boss, it's about making sure the company is following all the tax laws and staying compliant. And for every single employee, it's about getting their Form 16 right, which, directly hits their wallet when it's tax time.
Okay, so now that we know why it's so important, let's get into the what. This is the playbook itself. This is how we go from a giant pile of raw data all the way to those final, super important, legally required declarations. First things first, we've got to be super clear on one thing. Year-end payroll is not the same as your regular monthly payroll. Not even close. Monthly payroll is just, well, it's routine. You're processing payments. But year-end? That's all about validation. It's a massive deep dive to confirm a full 12 months of data. Every salary, every bonus, every little deduction.
The whole thing really breaks down into 4 clear stages. First up, you got to start with the basics, verifying all the employee data. Is it clean? Is it correct? Then, you move on to reviewing the whole year's worth of payroll. After that, the really crucial part, reconciling all those numbers with the company's main financial books. And finally, you wrap it all up by validating everything against the latest tax laws and compliance rules.
Now, that reconciliation step, that's the absolute heart of this whole thing. Seriously, think of it like a high-stakes matching game. The salary numbers from payroll have to perfectly, and I mean perfectly, match the company's general ledger. The taxes you deducted have to line up exactly with what you filed with the government. And the total amount of cash that actually left the bank, you guessed it. It has to equal the total net salary paid out to every single employee. There are 0 exceptions. All right, so we've got the playbook, we know the steps, but now we have to talk about the danger zone. We've got to be aware of the common traps that can completely derail even the most carefully laid plans. Because, it's one thing to know the steps. It's a whole other thing to know what can actually go wrong. And believe me, a lot of these risks pop up from simple things, gaps in the process, a classic human error, or just bad timing. And here they are, the 5 most common traps we see. You've got employees turning in their investment proofs late, which causes a huge last-minute panic. Then, there's someone picking the wrong tax regime, a simple click that leads to big problems. Of course, you have the old classic, simple manual data entry mistakes. Then, there are delayed statutory payments that rack up penalties. And maybe the scariest one, when all of this critical knowledge is locked up in the head of just one person, that's a huge risk. So the big question is, how do you avoid all these traps? Well, if all those risks represent chaos, then the hero of our story is a strong governance framework. That's what brings order and control to this whole process. And this really gets to a massive shift in how you need to think about this. The solution is not just to work harder or throw more bodies at the problem. The real answer is to implement a structured, professional, systematic approach. One with clear checklists, solid frameworks, and where everyone knows exactly what they're responsible for. And when you compare the two approaches, the difference is just night and day. On one side, you've got the standard approach, which is basically chaos, always scrambling for audits, constantly putting out fires and fixing errors. But on the other side, with a governance-led approach, you get audit-ready documents from day one, you slash your operational risk, and compliance is just baked into the process, not something you try to staple on at the end. So, when it all boils down, this is the main takeaway. A well-run year-end process isn't just about checking boxes on a list. It's so much more.
It's a powerful statement that your company's financial relationship with its employees and with the government is accurate, it's compliant, and it's 100% verifiable.
And that really brings us back to the most important question you can ask yourself. When you start to see year-end payroll through this lens of governance, it stops being that annual headache. It transforms into a truly strategic function, one that protects the business, does right by your employees, and builds a rock-solid foundation of financial integrity. So you have to ask, is your process just another task, or is it a genuine strategic advantage?